Hello people, welcome back after that short break. So let's continue our marathon discussion. So next one is we are revising accounting standard 13 that talks about the investment accounts. How the investment should be recognized, etc. is the scope of AS 13. Basically, investment means investments are basically some assets which are held to earn some returns in the form of interest, dividend, or capital appreciation. Capital appreciation means your purchase, let's say Tata ka shares at 100 because you feel after 1 month it's going to become 150. So to get that increase in value, you purchased an asset called investment that we refer to as capital appreciation. All right. Sir, do you remember the concept called DAC that we did in AS 10 and 26? What did we do for DAC? Added to the cost of the asset. Here also, when you're purchasing investments, there could be some DACs like brokerage, stamp duty, etc., etc. Yeah, security transaction tax, etc., etc. So those are your DACs. What should we do for them? Add it to the cost of investment. Some problems it will be there, some may not be there. If at all it is there, you will add it to the cost of investment. Okay. Do you remember studying exchange provision in AS 10? The exchange provision we learned in AS 10. What did we learn as exchange provisions? As a thumb rule, we have to use fair value. Fair value is not required to be used under two circumstances. One, when the transaction lacks commercial substance. Second one, fair value of the asset given up, acquired, both you cannot determine. Same here also. If you have done any exchange transaction, meaning you have purchased investment by giving away car like this. These sort of exchange if you have done, that is same as what? AS 10 ka principle, no change there. Okay. Now for accounting perspective, investments are of two types. Long term, short term. Long term ka we can call another name as non-current investment and non-trading investment. Current investment is also known as short term investment or also known as trading investment. Different names, one and the same. All right. Sir, how do you know or how do you classify an investment to be current or non-current? Short term, long term. How do you categorize them? If the period of holding is less than 12, short term. More than 12, long term. Yes. Actual or intention? Actual or intention? Intention. So we don't check the actual period of holding to find out whether it is short term or long term. We check the intention of holding. Like let's say I purchased ArivuPro ka shares today and I'm planning to hold it for the next 15 months. As of now, what is my plan? To hold it for the next 15 months. So that means my intention is to hold it for more than 12 months. So it becomes long term. Suppose my intention is to hold it only for let's say 7 months. Then short term. So you don't check the actual period of holding for classification. We check the intention. Sir, what if intention changes? You can do the reclassification. From long term, you can reclassify to short term or from short term to long term. Reclassification is allowed, but the classification is always based on the intention to hold it as such. Okay. Again, short term investment means the intention is to hold it for less than 12 months. Okay. How are short term investments valued at? Short term investments are valued at cost or market value, whichever is lower. This particular valuation can be done on individual basis or category basis, but the global basis valuation is not acceptable. Meaning, let's say you have two private limited company ka shares. You have purchased two private limited company ka shares and you're planning to hold it only for the next 6 months. So long term or short term? Short term. See, if it's a listed company, you have its market price listed in the stock exchange. But if it's a private company, how will you find out the market value? Because valuation is of short-term investment is cost or market value, whichever is lower. You need market value, no? So what standard says is you don't have to find out market value of first private company separately, second private company separately. If they are similar, you can value them together. Multiple investments, if they belong to the same category, you can value them together. Individual valuation is not mandatory. You can group them and value them together. Okay, that's one. All right. But now you tell me one short-term investment is a gold. Another short-term investment is an equity. Now can you value them both together? Are they related? No. That's what is the next point is trying to say. Overall global valuation is not everything. You can't put it into one basket and value. If they belong to same category, then you can do either you can value them individually or category wise. Okay. But if they are a different investment, you need to value them separate. So overall global valuation is not allowed. Again, no need to mug them up. Just know it for MCQ questions if at all it comes by. This is around what? Short-term investment. Next would be around long-term investment. Long-term investment means where the intention is to hold it for more than 12 months. Long-term investment is valued at cost. If there is any temporary decline in the value of the investment, you ignore. But if there is a permanent decline, you should account for it. Meaning, let's say you purchase the same Wipro shares, but I want to hold it now for 3 years. So it is a long-term investment, right? When I bought, the share price was, let's say, 100 rupees. One share price of Wipro when I bought it was how much? 100. Tomorrow it became 95. Should I have to do anything? Next day it become 105. Should I have to do anything? Sir, by default, the share ka price will go on fluctuating. We can't keep accounting every day, every hour, every minute. No. So what standard says is, if it's a long-term investment, value it at cost. How much did I buy it for? 100. So that means the cost for me is how much? 100. Value it at that. If there is a permanent decline in the value of the investment, you have to account. Suppose the company where I invested, right? It is suffering a huge loss. Okay, it has lost. There is some fraud that went on with the company. You identified the fraud associated with the company, and the share price started falling left, right, center. Share price is going on reducing. So now, do you think this looks like a small temporary decline or looks more like a permanent decline? Permanent decline. So what is temporary? What is permanent? You need to analyze it on a case-to-case basis. But if at all you conclude that it is a permanent decline, you should ignore that or account it. Like let's say from 100 it became 50. From 100 it became 50. Small drop or a big drop? Big drop. That means now from that, currently you are valuing the investment at what price? 100. Now we'll have to revise it and bring it to what? 50. Okay, you have to revise it and bring it to 50. From 100, or maybe I'll take a different number just for clarity. Let's say from 100 it became 40. From 100 it became 40. How much is the downfall? 60. That 60 is a loss. This will go off to P&L. Okay. You will account this loss only when under which circumstance you will account this loss? If it's a permanent decline. If it's a temporary decline, what do? Ignore it. You don't have to give any treatment. They have given some indicators for permanent decline. Some of the indicators is company is continuously suffering loss. Okay, thank you. Company cash flow is going negative. Okay, so like some of these are some of the indicators to tell that it is not a temporary decline, but rather a permanent decline. But again, you'll have to use your judgment to find out whether it is temporary or permanent. So you need some judgments involved there. Since long-term investments are of significant value and are a lot of importance, AS 13 allows long-term investments to be valued only on individual basis. Short-term is individual or category. Whichever is less. You can either go for category valuation or individual valuation. Okay, but for long-term investment, you'll always value on individual basis. No groupism. Category-based valuation is not acceptable because of the sheer size. Long-term investment will be usually the big in number. Hence, they've recommended this. Again, just a quick run through is good enough. Mugging up, not really required. If you remember, there is nothing wrong. Good. Okay. Move on. Okay, sir. Sir, I told what, sir? Classification is based on long-term, short-term classification is based on intention. Should the intention continue or can it change? Initially, my intention was only to hold it for 5 months. So I categorized as what? Short-term. Then I realized it is a good company. Let me hold it for 3 more years. So now my intention changed from short-term to long-term. So in that case, what you have to do? That provision, we call it as reclassification. If your intention changes, you can reclassify your investments. We'll remember it like this. There's actually 2-marker. Many times this question has come. Before your syllabus change happened, no? See, Interca, before this, before MCQ, you had a normal pattern. No? There, this one was tested quite a few times. Now also it can come easily. It can be fittable in case-based question. Okay. LC means CC. CL means CF. LC means CC. CL means CF. Or the L starts, sir. Okay. Sir, L means long term. C means current. Current means short term. If you are going from, if your intention, you are going from what to what? If you are going from long term to short term, you will value the investment. LC means CC. LC, you know, letter of credit. You can remember, no. And that way I'm saying, okay. CC, I think you can remember. Your bike ka CC, car ka CC, engine CCs are there, no? Yeah. So, C here refers to cost or carrying amount, whichever is lower. So, if you're going from long term to short term investment or long term to current investment, valuation will be done on what? Cost or carrying amount, whichever is lower. Cost or carrying amount, when you will check? On the date of transfer. On whichever day your intention changed, on that day you will find two components. What are those two components? Cost and carrying amount. Lower of the two will be adopted. Okay, people? Once more, got it? That we are remembering it as LC, CC. LC, CC. Now, Ulta scenario. Ulta means you're going from current investment to long-term investment. CL, CF. CL, CF. C for current investment. L for long-term. Now, you're going from short-term to long-term. That you will value it at cost. C for cost. F for fair value. Cost or fair value, whichever is lower. And you will check this cost or fair value on what date? On the date of transfer. Any difference will be transferred to P&L. No, you will, sir, Siddharth only, not Siddharth's question is why will there be any difference in cost and carrying amount? Sir, if it is short-term investment, you bought it at 100. So what is your 100? Cost. At year ending, you will have to value short-term investment at cost or market price, whichever is lower. Suppose market price is 90. What you will do? From 100, you will bring it down to 90. So your carrying amount will become 90. So that it can change. It may be same. It may be different also. So there. Anything else? Nope. So this is your reclassification wala provision. And now these are all problem related pointers. In investment, you must have solved big questions. Some big questions, some concepts I've just brought in here. Maybe I'll just check if I can cover anything quickly. Okay, maybe one or two I will tell, and then we will come back to the numeric. Go and solve numerical and come back to this. Sir, two types of questions can come usually from investment chapters. Big questions, I mean. One, they will ask investment in bond ka question, or they will ask investment in equity shares ka question. Okay. So now, whether it is bond or whether it is equity shares or preference shares or whatever, one terminology will come that will be thrown across called X interest, cum interest. X interest price, cum interest price. X means excluding, cum means including. X interest price means what it tries to say is, if they say it is an X interest price, what it really means is the purchase price or the selling price of the investment excludes the interest. Excludes the interest. The purchase price or the selling price of the investment excludes the interest. If it is, sir, X interest does not mean interest is not there. X interest does not mean interest is not there. Interest is there. It is just that it is not included in the purchase price or selling price. That's what X interest signifies. However, by chance, if they give you cum interest price, then what it means is, the word cum interest means including interest. So if they give you cum interest wala words, what it means is the purchase price or the selling price of the investment includes interest. Now people, investment comes in P&L or balance sheet? Balance sheet. Interest on investment? P&L. Both same or different treatment? Different treatment. So ideally, you should merge them or show it separately. Ideally, you should merge them or separate accounting, because one is a P&L component, another one is a balance sheet component. So you should treat them separately. But what does cum-interest mean? It includes the purchase price or the selling price, includes interest. Should it be included? No, because the accounting treatment for both are different. But what have they done? Included. So what we have to do? Find out how much interest is included in that purchase price or selling price and exclude. Done. This is what we'll have to do. Find. They will not give you that interest. How much interest is included, they will not give. We have to find it out and exclude. That's what we'll have to do it in this cum-interest adjustment. Any problem? No? All okay so far? We will do it in the problem, just trying to say it out theoretically. Okay, sir, one more adjustment you should not forget for debentures is something called accrued interest. Now, what is this concept? Now, let's say people, this particular accrued interest, no, two things you need to keep in mind for accrued interest. One is accrued interest ka opening balance, and other is accrued interest ka closing balance. This they will not give in the question. You have to do it. It's more like a hidden adjustment. Whenever they give you debentures wala question, interest is only coming for shares or debenture. So this adjustment is only relevant for debentures or bond held as a investment. This adjustment is not relevant for shares, only relevant for bonds or debentures. What you'll have to do is, this adjustment usually will be there, but to reconfirm that, what you will do is, you'll always check interest due dates with our year. We will always check compare two things. What are those? Our interest due date, we will compare it with our accounting year or financial year. If there is a mismatch, then only opening balance of accrued interest and closing balance of accrued interest will come. Otherwise, it will not come. So, didn't understand. Okay, check this. Let's say our financial year is 1st April to 31st March. We are following that as an accounting year. Anything wrong or perfect only? Perfect. But sir, we have purchased some bonds or debenture as an investment. We have not issued. We have purchased some other company ka bonds or debenture as a investment. That means we will pay interest or we will receive interest. We will receive interest. Usually, no sir, interest is not paid on a monthly basis. It can be paid, but majority of the companies prefer to pay it on a quarterly basis, half-yearly basis or yearly basis. But in our examination questions, usually it will be half-yearly adjustment. It can be monthly, quarterly, half-yearly, yearly, whatever. But in our exam questions, it will usually be half-yearly interest is what they're going to give it. That's the common way of ICI asking this particular adjustment. Half-yearly interest means, you tell me what will happen. Half-yearly interest means what will happen. Me, the investor, I will receive interest when? Every 6 months once. That means I will receive the interest 2 times in a year. Yes. Let us say that interest due date is June and December. What is the interest due date? June and December. Okay, but my year is what? April to March. Okay, now people, lastly, I have received the interest till what day? 31st December, correct? Because after December, the interest will be received on 30th June. But my year ends on 31st March. That means in the current year, I have received the interest till December. But does my year end on December or my year has 3 more months? What are those 3 more months? January, February, March. For these 3 months, am I holding the debenture? Yes. Has interest accrued? Yes. But have I received? So that's what you need to calculate. Done now. Because I have received the interest only till December, but my financial year goes up till March. So January, February, March ka interest has accrued, but not yet received. That's what we have studied in AS9 also. Interest should be recognized on an accrual basis, on a time period basis. Correct? No? So what did I say? This interest accrued will come only if the interest due date and accounting year matches or mismatch. Mismatch. Here you check interest due date is ending on December. Year is going up till March. Either this will be given or other way around. Other way around means We are following calendar year. Our accounting year is what? Calendar year. Calendar year means we are following Jan to December. But interest due date will be September and March. September and March. Interest due date is this. My accounting year is that. Okay, now also analyze. Sir, lastly, I have received the interest till what day? September. After September, I will receive the interest in March. But my year ends on what? December. So, I have received the interest till September. But does my year end on September or October, November, December is also part? October, November, December also is part of my financial year. Has interest accrued? Yes. But have I received? Means you will have to pass what entry? Accrued interest ka entry. What is the entry for accrued interest? Accrued interest account debit to interest income account. But one good thing is accrued interest will always come for how many months? 3 months. It will either be October, November, December, or it will be January, February, March. That's one good thing. Okay, sir. Now, let's look at this scenario. Sir, interest cut due date is September and March, and our accounting year is also 1st April to 31st March. In this case, may you tell me we have accrued interest or no accrued interest? Accrued interest is there or not there? Not there. Why? I have received the interest till 31st March. My year ends also on 31st March. Mismatch or matching? If it is matching, no accrued interest. Mismatch, accrued interest will come. That's how to identify. This will not be given separately. You need to identify this. But this is an important adjustment. Usually, there will be a mismatch. So, this usually you will find. That's another concept. We will apply it in one question also. Alright, Saru. Okay, let's do a thing. Let's take up a question just to get this better clarity over this. First, we will take up one question on debentures. Then we'll go for one question on shares. So that means both the things are covered. Sometimes what ICAI does is they'll combine the question. They will give how many investment in the question? Share also, debenture also. Any new treatment or it is just a combination? We are doing it individually. They will club and ask. They will reduce the number of adjustments, but they will make it as 2 adjustments. Problem may become lengthier, but any new concept or nothing new? Nothing new. Yes, in a way you think like I am solving 2 questions, but I am solving it together. That's all. Okay, no new concept. Okay, let's take up this question. A lot of similar question is there in our class notes and study material also. So not a big deal. Look at this. ABC holds 2000 15% debentures of 100 each. Sir, did they say rupees 2000 or only 2000? So what is this? Number of debentures. We are holding how many debentures? 2000 debentures. What is the interest rate on this debenture? 15%. Each ka face value 100. Okay. So if you multiply, what is the total face value? 2 lakh. 2000 into 100 gives you 2 lakh. Why am I calculating face value? Interest is always calculated on the face value. Okay. But did I buy it for 2 lakh? Check. No, my cost price is 2 lakh 50,000. I have purchased for 250, but the total face value is only 2 lakh. Okay. All right. No problem. Okay. Sir, they have given the date on 1st April. The moment they say, in fact, they said we purchased or we are holding. Holding means this is come in the current year or it's an opening balance. Opening balance. And opening balance is given on 1st April means we are obviously following calendar year or April to March. Our financial year is what here? 1st April 2022 to 31st March 2023. That's our financial year. But look at the interest due date. June or December. June or December. This is the interest due date. 30th June 2022. One time I will receive the interest. Next interest I will receive on 31st December 2022. Matching or mismatch? Accrued interest there or not there? There. How many months? 3 months. Okay. Accrued interest will have an opening balance also. It will have closing balance also. Why it will have opening balance? Because did you buy this investment on the first day of the current year or you had it? You had it, they said. You are holding, they are saying. We did not purchase. We are holding it. So it's come from the last year. Sir, this year ka accrued interest closing balance will become next year ka. Opening balance only. Last year you would have passed the journal entry for accrued interest. So last year ka closing will become this year ka opening. So accrued interest will have opening balance also here. Most probably closing balance also. Yes, sir. That we have sorted. Okay, let's go further. Following are the details of 15% debentures purchased and sold during the year. Normally they will give you two more purchases, 2 more sales. One opening balance and 2 times purchase, 2 times sales. That's usually ICI way of asking. Usually. Check. On 1st May 2022, that is current year, 1000 debentures. How many number of debentures? 1000. Are purchased on what basis? Cum-interest basis. For what price? 1,05,000. Now I think you have an idea about cum-interest. Cum-interest means what? Here, are we selling it or are we purchasing it? Now tell me in that context. Cum-interest here refers to what? The purchase price of the debenture. Purchase price of the debenture includes the interest. Including interest, how much have you paid? 1,05,000. Yes. But should the interest be included? Debenture is a balance sheet component. Interest is a P&L component. Ideally, you should keep it separately. What have they done? Merged. So what are we to do? Find out how much interest is included in 105 and exclude. That we will do how to find out. So far, okay? Okay, next one. 1st November 2022, 1,200 debentures be sold on what basis? X interest basis. What is the selling price? 128, 200. X interest means what? Here we have sold. So selling price excludes the interest. Interest is not there or interest is there? Interest is there, but it is not included in the selling price. That's what X interest means. Then again on November you have purchased. Again on December you have sold. It will either be X interest, cum interest. They'll keep playing around whatever it is. So 2 times you have purchased on a different dates. 2 times you have sold. Usual way of asking these sort of questions. Fine, people. Now you need to prepare investment account, ledger account you need to prepare for the year. Okay. And they're saying these investments are valued at cost. These investments are valued at cost means it is short term or long term. Which investments are valued at cost? Long term investments are valued at cost. Short term investments are valued at cost or market value, whichever is low. Here probably the intention is to hold it for more than 12 months. That's the reason it's a long term investment. Now people, whenever you sell an investment, you will make some profit or you will make some loss. There are couple of ways through which you can find out profit or loss. 2 methods to find out profit or loss. One is FIFO method, first in, first out. Another one is average cost method. FIFO or average cost method. You can also call it as weighted average, it's fine. But we don't give any weightage in terms of time. We give the weightage in terms of number here. Okay. So you can call it as simply weighted average or average cost also, it is fine. Okay. So here check what method we have to use. FIFO. Sometimes the problem will say which method you have to use, FIFO or average cost. If they don't specify the method, always take average cost. Much easier. Much easier, simpler. I'll tell you maybe once. I'll do one more question of the shares through average cost method. That way you will get to know why average cost is much easier and less time consuming. Okay. If they specify the method, follow that exactly. If they don't specify, go for average cost method. Not that if you follow FIFO it is wrong, but average cost will be a lot more simpler and less time consuming. So my preference is that. Okay. Now people, if you remember all our bonds debenture question we used to solve in a particular format. Anybody remembers what is that format of? First is what we used to prepare. Interest we used to account. Then purchase price. Then profit or loss. So I used to solve all the questions in this format. This is one, second and selling price the third one. We'll continue with the same format to establish that continuity. So what is it is? Sir, first first working note you put it up for interest. For that you need to know the due date. Do you know the due date of interest? What are those? June and December. Note that down here. The due date is June and December. Now this particular working note, sir, you have to prepare it chronologically, as in date wise. date wise. You pass journal entry according to the dates, no? So according to the dates, in that order only you prepare this particular working note, because it will help you to prepare the ledger later on. The posting can be done using this much easier. So prepare it chronologically. Date wise you prepare it. So you'll have to identify what is the first transaction. 1st April, May. Sir, do not forget working note number 1 is interest. Working note number 1 is interest. Do we have any accrued interest in this particular problem? Do we have any accrued interest in this problem? Yes. How? Imagine last year. You have received the interest till which date? 31st December. But your year ends on March. That means last year, January, February, March, was it accrued? Yes. But did you receive interest? No. That means last year you would have shown interest accrued as a closing balance. Last year ka closing will become current year ka opening. How many months ka? 3 months. So calculate. Last year, how many debentures did I have? 2000. Interest is always calculated on face value. How much is the face value? 100. Multiply 2 lakh, right? So 2 lakh, that's what we write here. On 1st April, we have to write interest accrued ka opening balance. Have one face value column because interest is always calculated on face value. How much is the face value here? 2 lakh. You'll calculate interest for how many months? 3 months. So calculate what interest rate? Interest rate what rate? 15%. So calculate 2 lakh ka 15% into 3 by 12. How much? 7,500. This is your interest accrued ka opening balance. Sorted out. Numbers are fine for everybody. Okay, moving along. What is the next transaction which happened? This is captured. What is the next transaction? Next transaction happened on 1st May. What happened on 1st May? You purchased. You purchased the debentures on what basis? Cum-interest basis. Now, pay attention to this one. Sir, you have purchased the debenture means somebody else has sold. That's how it works, no? You have purchased means somebody has sold. Think from that somebody's viewpoint. Think from the other party somebody's viewpoint. On these 1000 debenture, they have received the interest till which particular date? Once again, you have purchased means other party has sold. That other party on these debentures have received the interest lastly on which date? They have sold it on May. Sir, company pays the interest only on 2 dates. What is that? 30th June and 31st December. Did they hold it till 30th June or they sold it off on 1st May only? They are not holding it till June. They have sold it in May only. That means they have received the interest till 31st December of last year. On these debentures, the seller has received the interest only till 31st December. Agreed? Do you agree with me? That means how many months interest they have lost? How many, by selling, how many months interest have they lost? 4. How 4? They have received the interest till December. January month, did they get? No. February? No. March? No. April? No. 1st May they have sold. Leave that. How many months interest is lost? 4 months interest they have lost. Are they your cousin? Are they your family member? If they have lost one interest, they will let go or they will collect it from the other party. You have purchased, they have sold means that 4 months ka interest they will collect it from you or me. Yes or no? How many months interest did they lose? 4. That 4 months ka interest is included in the purchase price. That's the reason they are saying it as a cum-interest purchase. Everyone got this? Pakka? Okay, calculate. How many debentures did you buy? 1000. Interest is always calculated on face value. Calculate how much is the face value of one debenture? 100. So total face value will be 100 into 100 only you purchase, no? Or rather 1000. 1000 into 100 is 1 lakh. Right? How many months interest they lost? 4 months. So calculate. What is the interest rate? 15%. 1 lakh into 15% for how many months? 4 months. How much is that? 5,000. This 5,000 is the interest element included in 1,05,000, which we have to exclude. That I'll tell you later. But for now, we'll only focus on calculating the interest portion. Done, Ji. Need a minute, Aji. Okay. Sir, I told this working note you have to prepare it date wise. Now after 1st May, next transaction they have given us 1st November. But hang on. Between 1st May and 1st November, any other transaction will happen? Huh? Yeah, interest due date is what? 30th June, right? Whichever company got debentures you have purchased, that company will pay interest on what day? 30th June. Interest you will get on what? How many ever debentures you are holding, on that you will get interest. Yes, on what day? 30th June. So the next transaction will be 30th June. You will receive interest on your holding. How much are you holding? So from last year you are holding 2 lakh. Now you purchase how much more? 1 lakh. That means how much are you holding? Adding these two, totally you are holding 3 lakh. On 3 lakh debentures you will get interest. Agreed? Yes, sir. Any doubt? No. Sir, that company whose debentures you have purchased, they pay the interest on what basis? They calculate the interest on face value, but they pay the interest monthly or half yearly. That means they pay the interest every 6 months once. So on 3 lakh, you will get the interest for whole year or half year. So calculate. How the calculation will look like? 3 lakh into 15% into 6 by 12. If you do that, how much is that? 22.5. This much interest you will pay or you will receive. You will receive because you are holding this debenture as an investment. Okay, next, after 30th June, what is the next transaction? 1st November. What happened on 1st November? 1,200 debentures you sold. On what basis? X interest. For what value? 128,200. What did I say? X interest means what? Selling price. Here you have sold, no? So selling price excludes the interest. Does it mean interest is not there? No. Interest is there. It is just that interest is not included in the selling price of how much? 128. Yes, sir. All right. Now let's calculate. Let's calculate what? Interest. Interest is there. It is just that it is not included in the selling price of 1,28,200. Now let's calculate. When did you sell? 1st November. Write down that date. 1st November you have sold. What kind of a sale have you made? X interest sale. So I'll just call it as interest on X interest sale. Sir, how many debentures have you sold? 1,200. Now you are the seller. How many debentures did you sell? 1,200. Sir, on these 1,200 debentures, we, the seller, we have received interest lastly till which date? Now we are the seller. We sold 1,200 debentures. Lastly, we received the interest on 1,200 debentures on what date? 30th June. Yes, sir. Above only it is there. We have received the interest only till 30th June. How many months interest we as a seller lost? July, August, September, October. 1st November we have sold. Leave one day out. How many months interest we have lost? 4 months. Now we will let go of that or recover it. Recover it from whom? The purchase. The seller will recover the interest from the purchaser. As simple as that. Okay, G. How many months? 4 months. So calculate. Interest is always calculated on the face value. 1,200 debenture, each ka face value 100. That makes the total face value to be 1,20,000. What is the interest rate? 15%. How many months? 4 months. So calculate. 6,000 bucks. Move forward. Like this, they'll give you 3-4 transactions. You have to keep repeating the same. You got the hang of it, right? 30th November ke baad, what is the next transaction? Or rather, after 1st November, next transaction is 30th November. As what they've given. What did you do on 30th November? We purchased. On what basis? X interest. What does it mean? Purchase price excludes interest. Does it mean interest is not there? No. Interest is there. Just that it is not included in the purchase price. So what will you write? 30th November mein you will write interest on X interest purchase. How many debentures did you buy? 500. Each ka face value 100. What is the total face value? 50,000. Sir, now you have purchased. I mean somebody has sold. That somebody on these 50,000 debentures has received the interest lastly on which date? Sir, interest is paid only on 2 dates, June and December. Did they wait till December or sold it off 1 month before only? They sold it off. That means lastly they have received the interest only till 30th June. How many months interest have they lost? July, August, September, October. They've sold it on 30th November. So 5 months interest they have lost. Will they let go or recover from us? How many months? Interest calculation on what? Face value. Face value is 50,000. 50,000 may you calculate 5 months interest, you will get 3125. Next, after 30th November, what have they given? 31st December. What did we do on 31st December? Sir, on 31st December, 2 transactions will happen. What are those? You will receive interest also, and there is also a sale. Always first capture on the interest due date if there is any purchase sale transaction. First account purchase sale, and then only account interest received on holding. Okay, just the way ICI presents it. No particularly logic as such, but that's the way they look at it. So on the interest due date, if there is any purchase or sale transaction, first record purchase or sale and then only show interest received on holding wala adjustment. Okay, on 31st December, what did you do again? 900 debentures you sold on what basis? Cum-interest basis. Cum-interest means interest is included in the selling price. Okay, so how many debentures? 900. Which day? 31st December, you made a sale on what basis? Cum-interest basis. 900 debentures, total face value will become 90,000. Sir, you are the seller. You are the seller. You have received the interest on these debentures lastly on what date? 30th June. Because you have already sold now. Who will receive the interest from the company? The purchaser. On these 90,000 debentures, we have received the interest only till 30th June. How many months interest we have lost? July, August, September, October, November, December. Full 6 months we have lost. Will we let go or recover? Recover. How many months come? 6 months. Calculate. If you calculate, you will get 6, 7, 5. That much we will recover. Danaji. Again on 31st December, one more transaction will happen. What is that? 31st December is what day? Interest due date. So again on 31st December, we will receive interest on our holding. How much ever debenture we are holding, on that we will receive interest. Now calculate, be careful here. If you want, you can calculate from the beginning, or you can start from 30th June. Till 30th June, how much you were holding? 3 lakh. Take your calculator. Till 30th June, till the last due date, you were holding 3 lakh. Then you purchased 120 more. When you rather you have sold. When you sell, the value will reduce. So 3 lakh minus 120 you do. So you'll get 180. Again you purchased 50. So plus 50 if you do, you'll get 230. Again you sold a 90. 230 minus 90 is what? 140. Yeah. 140 is what you are holding. Agreed? Yes, no, people. When you sell, minus. When you purchase, add. From here, add all the purchase transaction, deduct all the sale transaction. You should be getting 140. All of you got that? So you are holding how much of debenture? 1,40,000. Now interest due date. As an investor from the company, you will receive the interest. How many months interest? 6 months. Because company pays the interest always on a half yearly basis over here. So on this 1,40,000, calculate the interest for 6 months. How much is that? 10,500. Any more transaction they have given, or that's all? That's all. But one more is there that they will not give. It's a hidden one. What is it? Interest accrued ka closing balance. You have accounted interest accrued ka opening, no? Same way we have to account interest accrued ka closing balance. Why? Sir, on this we are holding how many debentures? 140. We have received the interest till which date? 31st December. But is our year ending on 31st December or 31st March? I mean January, February, March. Has it accrued? Yes. Have we received? No. That means interest accrued will have a closing balance. How many months? On this 1,40,000, calculate the interest for 3 months, which is 5 to 5. So that's all. This is the first major working note. Any problem? It will be lengthy, but any difficulty or pretty straightforward? Straightforward. Need a processing or next one? All right. So the next working note is to find out the net purchase price. To find out the net purchase price. Sir, how many times have you done purchase transaction? Check. One's on 1st May. I think we check here only. One's on 1st May. Another one on 30th November. Right? So on these 2 dates, we have to find something called net purchase price. That is our next working note. Okay. Sir, before this concept, I had told you, if there is any DAC, what do? Sometimes they will give, sometimes they will not give. But I have made a format and inbuilt that format everywhere. First, you will take purchase price. Then if there is any brokerage or stamp duty, add. What is this? DAC. Some problems may they do give. If they give, we need to bring it in. Okay, sir. Then interest you need to minus. Interest you need to minus. Why? Sir, some problems may they will say you are purchased on what basis? Cum-interest basis. Cum-interest means purchase price includes interest. Interest is P&L component. Debenture is a balance sheet component. Should it be merged or it should not be? Not be. So if it is merged, what we have to do? Exclude. So you will deduct interest only in one case. What case is that? You will deduct interest only on one case. What is that? If it is a cum-interest purchase, then only you will reduce. Otherwise, not necessary. Okay. Now go back to the question. On 1st May, you purchase 1000 debentures. No, on what basis? Cum-interest basis. At what price? 1,05,000. So your purchase price is 1,05,000. Is there any stamp duty brokerage? Zero. But this is what purchase? On 1st May, what purchase is it? Cum-interest. So interest is included. How much interest is included? Should we have to calculate again or already done? Go to the previous working note. 1st May. Check 1st May. This is your 1st May. Cum-interest purchase. How much interest is included? 5,000. What to do now? Subtract. Check 5,000 is deducted. Yes. So from 1,05,000, 5,000 interest was included. So the net purchase price will become 1 lakh. This is one. How many ever times you purchase? You need to find out the net purchase price. But usually only 2 times will be given. Usually. Okay, that's what we have seen. But if an institute likes you more and if they make it 3 also, that's a transaction between you and institute. I will not bother. Add one more column in that case. Okay, but usually only 2 times they give. That's it. Or one more time. One more time you purchase. When? 30th November. How much? You purchase 500 debentures at what price? 54,500. But fortunately, this is what price? X interest. So anyway, format will take care of. So on 30th November, you are purchased on what basis? X interest. How much did you pay? 54,500. Is there any stamp duty brokerage? No. If it was there, what you would have done? Added. Interest, is it there? Interest, is it there? Yes. But is it included in 54,500? No. Why? Because it is what sort of a price? X interest. So should we have to reduce any interest or not required? Not required. That means this price only will become your net purchase price. This is your working note number 2. Move on to the next. Okay, next working note is to find out net sale proceeds. Net sale proceeds as well as profit. We find net sale proceeds as well as profit or loss made on sale. That's your working note number 3. I'm just calling it as profit on sale, but both gets captured. How to do it? Same fashion. Sir, go back to the question. How many times did you sell your debentures here? 2 times. One on 1st November, another one on 31st December. First list that out. Particulars, 1st November, 31st December. Also write what kind of a sale have you made. On 1st November, what kind of a sale did you make? X interest. On 31st December, cum-interest. Write that. It will be easy for our reference. On 1st November, X interest sale. 31st December, cum-interest sale. Okay, first the selling price. On 1st November, when you sold, how much money did you recover? 1,28,200. Write that as a sale proceeds. Okay. Now, brokerage will be charged only at the time of purchase or also at the time of sales. Can also be charged at the time of sale. If there is any brokerage collected, reduce that. If there is any brokerage, reduce that. Why reduce? Previously we added. Why are we reducing here? Sir, when you sell the debenture, how much money you will collect here? 128. brokerage you will get or you have to pay. So now this is an inflow. Brokerage becomes outflow. So net may you will receive more money or less money? Less money. So if there is any brokerage, if at all they have given, reduce that. In this problem, brokerage adjustment is not there. If it was there, what you would have done? Reduce it. So here I will write -0. Would you be fine with that? Done, G. Okay. Then you have to also reduce interest. Interest you will reduce every time or one case. What is the case? Cum interest. Is it a cum interest sale or an ex interest sale? So will you reduce any interest or nothing? Nothing. Because it is a case of what? Ex. That means the sale proceeds only will become net sale proceeds. One and the same. That's it, or one more transaction. On 31st December, what kind of a sale did you make? Cum interest sale. Go back to the question. On 31st December, when you sold 900 debentures, how much money did you recover? 1,18,000. So your sale proceeds is 1,18,000. Is there any brokerage? No. But what kind of a sale? Cum interest. Cum interest means the selling price includes the interest. What are we to do? Exclude it. Should we have to find the interest or already found? Already found. Go back to 31st December ka previous working note. Working note number 1 here. Interest on cum interest sale. How much interest is included? 6750. What we have to do for that 6750? Reduce. Reduce down. Yes. By reducing, you will get the net sale proceeds. Okay, G. Now, when you sell an investment, you'll end up making some profit or you'll end up making some loss. The next step is to find out the profit or loss. So, to get profit or loss, two things we compare. What are those? Sale value and cost. Sale value and cost we compare, and accordingly we'll get profit or loss. But hang on. Here we have to find out profit or loss under average cost method or FIFO method. Question clearly said that you'll have to use what method? FIFO method. How does FIFO method work, or what does FIFO mean here? Meaning I know, first in, first out. Abbreviation I know. What does it mean? First in, first out means what? Whichever investment you purchase first, you will sell it first. Whichever investment you purchased first, you will sell it first. Sir, all this came early, or there is one more before? Sir, from last year ka closing balance became current year ka opening balance. How many investment you already had in the last year? That means which came first? 2000. So you will sell this 2000 first. That's a first in, first out ka concept. Okay, Ji? Okay, let's find out. Sir, what is the cost of this 2000 debentures? 2,50,000. For 2000 debentures, the total cost is how much? 2,50,000. Okay. Now you sold. Did you sell 2000 debentures on 1st November, or how many did you sell? First time when you sold only how many debentures? 1,200. So for 2000 debentures, 2,50,000 is the cost, means for 1,200 debentures, how much is the cost? You need to proportion. That's how FIFO works now. Yes, na people. Tell me, sir, how much? How do you get X, sir? 1,200 into 2,50,000 divided by 2,000. How much is that? 1,50,000. That is your cost. Basically, 2,50,000 is a cost for 2000 debentures. For 1,200 debentures, how much? Why 1,200? Because you sold only 1,200 debentures initially. So that way you will get the cost. How much is the cost? 1,50,000. Happy face or sad face? Sad face. Why? Cost to 150. Sold for 128. So it's a case of a loss. How much loss? 21,800. One way you've got it. Another transaction also you have done. One more time you have sold. In a similar fashion, you'll have to bring out the profit or loss on that also. Can we work that out now? Okay, next sale you made on what date? 31st December. What is the net sale proceeds? 1,11,250. Now we have to compare this with cost. But hang on. Sir, last year, how many debentures did you have? 2,000. In that, how much you have already sold? 1,200. So in that lot, in that category, still any debenture is remaining. How much? 800. You had 2,000 debentures last year. You have already sold off how much now? 1,200. How much is remaining? 800. Yes. But have you sold 800 or 900? This is the FIFO problem. That you may not sell from one category, you may sell from more than one category. That means two times you have to find cost and then add. Average cost sorts out this problem. That's the reason average cost is a lot easier. Now, if you just check, you have sold how much? 900. In that 900, from the first category, how much came? 800. Which is that first category? Opening balance. Balance 100 came from the debenture purchase. When did you purchase the debentures? First May. So this has come from first lot or second lot. So two times you have to find the cost here. What is the cost of this 800 separately? What is the cost of 100 separately? And then sum it up to get the cost. Yes, sir. Okay. How much did you pay for the opening balance debentures? 2,50,000. Sir, 2,50,000 is a cost for one debenture or 2,000 debentures? How much did you sell? 800. Calculate. So what is the cost? 1 lakh. Okay. Then this 100 debentures you have sold, that has come from which category? Opening balance category or purchase category? Which did you purchase? 1,000. Right? So how many debentures have you purchased? 1,000. How much did you buy it for? 105. Brohaspati, don't take this. We already calculated net purchase price for 1,000 debentures. This is a 1,000 debentures ka net purchase price. How much? 1 lakh. Interest is included there. So that's the reason. Okay. So the net cost for that 1,000 debentures is 1 lakh. It is there in working note number 2. Okay. This 1 lakh is a cost for one debenture or 1,000 debentures? 1,000 debentures. Did you sell 1,000 debenture or 100 debentures from this category? 100. How much is this? 10,000. That means the total cost is what? 1,10,000. Two times you'll have to calculate this. Done now. You sold it for what? 1,11,000. Cost is 1,10,000. Sad or happy? Happy face. How much extent? 1,250. It's a case of profit. That's it. This is your working note, not the requirement. What was the requirement? Ledger. But to prepare the ledger, you need all this. Once you have this, ledger is very, very straightforward. Because what is the journal entry for investment purchased? Investment to bank. What's the journal entry for investment sold? Bank to investment. So that is just 1111 entry. But what amount of these working notes give it? We'll do the posting. Provided you are fine. We are all on the same page means let's go ahead with the postings. Can we look at the postings? Okay, carry on. Done. Now people, they ask the investment ka ledger. When you prepare ledger, no, normally what is the ledger format? Date to particulars, amount, right? Here you have it as date, particulars, face value, interest, amount. Face value, interest. Instead of principal, you can write amount. This is your debit side. Replicate the same column on the credit side. Face value is just for the disclosure sake. Interest, because you remember in your Bachpan 11th grade and all, you used to prepare a double column cash book. Double column, triple column cash book and all you prepared. No, cash to bank to discount to blah blah. This is like that. Here we are preparing interest ledger, investment ledger together. Why, sir? ICA format, sir. ICA Zindabad. Mother body says do it like this, means we will do it like as simple as that. They want interest also, they want investment also. Both you have to compare. Okay. Face value, I don't know why they need it, but they have put it, so we'll also put it. Okay. Now posting is very easy because we have prepared one particular working note date wise, which is what? Interest working note. So refer that and go on posting. First, what is this? Opening balance. Two accounts will have opening balance. What are those? Accrued interest is an asset. Investment also is an asset. Asset ka opening balance where it will come. Debit balance. But where will you post it as? To balance brought down. What is the face value? Face value also you have. Check. How much is the face value? 2 lakh. Interest column, how much you will write? 7,500. Face value column 2 lakh. Interest column 7,500. Amount column they have only given. You have purchased the debentures for what value? 2,50,000. This is the first posting. Okay, Saru. Next transaction you purchased. What's the journal entry for debenture? Investment purchased. Investment to bank. Okay. When you purchase the investment, seller would have lost interest. So you have to compensate. So two payments will happen. Can you tell me what are those two payments? One payment for debenture purchased, another payment for interest. How much interest did you pay? 5,000. What is the face value? 1 lakh. What is the journal entry for investment paid or interest paid? Interest paid, what is the journal entry? Interest to bank. Investment purchase, what is the journal entry? Investment to bank. So the posting is same. You'll write what? Simply to bank. On 1st May, you'll write to bank. Face value column, 1 lakh. Interest column, how much? How much did our working note say? 5,000. Okay. Principal amount column, what you'll write? You have working note number 2, which gives your net purchase price. Check your working note number 2. Net purchase price is how much? 1 lakh. See, have they posted that? This is done. Like this, you'll have to pick the numbers from various working notes and go on posting. Okay, next, after this, what happened? Interest received on holding. You have received the interest. What is the journal entry for interest received? Interest received. Bank account debit to interest. So the posting will be what? To bank or by bank? So on 30th June, you will post it as by bank. Face value column, principal column, nothing, because you received what? Interest. Only in the interest column, 22,500. Next, you made a sale. You made a sale on 1st November. What's the journal entry for investment sold? Bank to investment. Sir, when you sell investment, you will receive you will receive two amounts. What are those? One for debenture, one for interest lost. How much interest did you lose and recover? 6,000. What's the journal entry for interest received? Bank to interest. So you will post it as what? By bank. In the interest column, 6,000. Face value column, 1 lakh, 20,000. Principal column, what you will write? Net sale proceeds, which is there in which column? Which working note? Working note number 3. Check your working note number 3. What is your net sale proceeds? 1st November when you sold, net sale proceed is 1,28,200. Have they posted? Yes. Okay, sir. So when you made a sale of investment, you will either make a profit or you will make a loss. Here, what did you make? Profit or loss? Loss. Loss means where it will come? Loss means it will come on the credit side. Loss means it will come on the credit side. Okay, why? It's very simple. Investment is shown at what price? Investment is shown at what price? Cost price. Right? You have sold it at a loss means, is this cost? To get cost, you have to add loss also. Or if you simply want it as formula, or you can remember that, I think maybe this one cash flow statement ka entry you remember pa. I told you have to add 3 things and it will go to original cost. No, what are those 3 things? Bank, accumulated depreciation, loss on sale. What is the entry you passed? Bank account debit, accumulated depreciation account debit, loss on sale debit to PP. When you posted this in PP ledger, it came on the credit side. So that way you can visualize. Okay. So loss comes on the credit side, profit comes on the debit side. Okay, how much loss we suffered? 21,800. That they have posted here. Where will that loss go to? P&L. So you'll write by P&L 21,800. Okay. Next, what next happened? On 30th November, we made a purchase. Okay, when you make a purchase, you'll have to make 2 payments. What are those 2 payments? One for interest, one for debenture. For interest, how much did you pay? 3,125. Face value, how much? 50. What is the journal entry for interest paid? Interest to bank. So you'll write to bank. Interest column, how much? 3,125. Face value column, 50,000. Principal column, what you'll write? Net purchase price, which is there in column number 2. Check your column number 2. How much is your net purchase price for second time purchase? 54,500. Have they posted 54,500? Yeah, 54,500. Next, after this, you made a sale. When you sell, you will recover 2 amounts. What are those 2 amounts? One for debenture, one for interest. How much face value you sold? 90. How much interest you recovered? 6,750. What is the journal entry for interest received? Bank to interest. Posting is by bank under the interest column 6,750. Face value column 90. Principal or amount column, what will you post? Net sale proceeds. Where is it there? Working note number 3. Working note number 3. Net sale proceeds is 1,11,250. Posted Yes. But when you sold this, you'll end up making some profit or you may end up making some loss. What did you make? Profit. Profit means the posting will be on the debit side. What is the debit side? You'll post it as 2 P&L 1257. Next, interest received on holding. What's the journal entry for interest received? Bank to interest. How much? 10,500. Posted in the interest column. They are posted by bank 10,500. Next, what have we told? Interest accrued ka closing balance. Face value column 140. Interest column 5250. So both are asset. Asset ka closing balance where it will come? Credit side 140 5250. This one you are ascertain as a balancing figure. Principal you ascertain it as a balancing figure. That's it. Okay, G. And all the interest, if interest account has any balancing figure, if interest ka ledger account doesn't get matched, where will the interest be transferred to? P&L. So all this you total. This side is 51. Balance is not matching. Whatever is a balancing figure in interest, you will transfer it to P&L. Does not calculate it, just transfer. This is your entry. Easy, but there is a scope of doing a lot of silly mistakes here. Instead of posting it in the interest column, we have seen many students post it in the amount column. Because you are racing against time. This much you have to do it in 25 minutes. Not an easy job. Easy to say, but difficult to execute. So when you are constantly racing against time, a lot of clerical errors will happen. So the first primary focus is prepare of the working note. So that even if you don't have time for this, at least you will get some marks, some major marks for working notes. Okay. All right. Now, if you want to increase and cover them within time, you'll have to practice. That's the only way you can increase your writing speed and thinking speed. The more and more you spend time with a particular subject, processing time will become lower and smaller and smaller. That's just the only way. Yes, people. So this is what? Chapter over? No, but we feel it's over, no? Yeah. So investment in bonds and debenture part we have covered. There is one more called shares. Share if you do now, chapter will be over. 1 minute. Let me see if I can explain this or it's totally problem centric. I think we'll directly take a problem and learn better. Nothing, sir. Time is there, pa. Okay. What? Train, where is it? What time? Where is it? I don't know. When is it? It's at, I think, 4:30, I think. 4:30 or 5 o'clock. I think maybe 5. Maybe, mostly 5. Yeah. Wait, you want to leave me go early, huh? But yeah, I'll have to do some packing, so I'll have to leave by maximum 2. I think I'll have to wind up. Okay. Maybe we will wind up a little early only today. Fine, let's finish this first and then we'll worry about that. Because I say something and if it doesn't happen, you will be like, and all you'll start. Okay, question number 6 you wanted. No, we'll take 8. 8 is my favorite number. Okay. All right. Sir, this is about shares. If you have an investment in shares, how we need to account is what we're going to learn. This is our class notes ka problem. I think it is there in study material also. Study mat question only. On 1st April 20x1, Sundaramurthy 25,000 equity shares has purchased of which company? X Limited. At what value? 15 per share. That means what is the total cost? 25,000 into 15 if you do, you will get 3,75,000. Okay. Sir, did they say Sundar purchased or Sundar had? Had. So, opening balance. Sir, dividend accrued ka opening balance. Sir. Sir, interest accrues based on time. Dividend accrues on time. Dividend is company ka choice. Company can declare it. Company can choose not to declare it. So, dividend will not have any accrued opening balance, closing balance. It's only that adjustment is only relevant for interest because dividend never accrues. Okay. That's one. Now check. Now people, I mean, sir, we have to put same working note, sir. No, sir. Here, no, they'll bring in some right shares, so bonus shares and all. Working notes will be slightly different here. What you do is, if it is straightforward, no need to put any working note. If it is straightforward calculation, no need to put any working note, directly you can do. Like here, is there any calculation difficulty here or very straightforward? Straightforward. Directly we will post the entry into the ledger. Now debenture ka what was the ledger format? Investment in debenture ka ledger format was what? Date to particulars, face value, interest, amount. Here date, particulars, face value. Instead of face value, here we take the number of shares for easier calculation purpose. Those are anyway dummy columns. Instead of face value, substitute with number of shares. Instead of interest, you can substitute with dividend. Amount column, you can keep it as it is. But for equity investments, sometimes company ICA solutions bring in dividend column. Sometimes they ignore. Okay. But in all our regular class problem, we have included dividend and we have solved. If you include also, nothing wrong. Okay, Naji? I think in the solution, in the suggested solution, only number and amount is there. Amount is what? Dividend column or investment column? Investment column. But it's okay. Anyway, dividend will present it as a working note also. Done, Naji? Even if you bring in a dividend column in between, it is absolutely okay. Now, we have purchased what as an investment? Equity shares. We have purchased it in the current year or it was there from last year. So this is investment account ka what? Opening balance. How much value? 25,000 into 15. How much is that? 3,75,000. What is investment ka opening balance? Where will you post it as? In the investment ledger, you'll write to balance brought down. How many number of shares? 25,000. What is the value? 375. No need for any working note. Here only you can write to balance brought down 25,000 into 15. In bracket may you show no need for separate working note. If it is easy. Done, ji? Next. Nominal value as in face value of those shares are 10. Why is face value relevant? If at all this company declares this, which company ka shares have you purchased? X Limited. If at all X Limited declares the dividend calculation will happen on face value. For that we need that, so let it be. On 20th June, the same person Sundar, he purchased another 5,000 shares at what value? 16. 16 5s are 80. So 80,000. Any stamp duty, brokerage, blah blah drama. Sir, if there is any stamp duty, brokerage, STT and all, it becomes what? DAT. What will you do? At the time of purchase, you will add. At the time of sales, you will minus. Here, not there. So, any working note necessary or not required? Not required. What is the journal entry for additional investment purchased? Investment account debit to bank account. How many shares did you buy? 5,000. So, investment ledger may you'll write to bank. Number of shares column 5,000. Amount column 80,000. So far there. Next. The directors of this company X Limited, they've announced a bonus and right shares. Bonus and rights have come. We'll see what has come first. No dividend was payable on these issues. On the right shares and bonus shares, should we have to calculate dividend or we should not? We should not. Why? Maybe the dividend has come in first and then the right shares and bonus have come. We don't know. But if the question says don't calculate, we will say good for us. We will not calculate. We will not worry about why and how and who and all. Not that you are worrying right now, but anyway. The terms of the issue are as follows. First, sir, what came over? Bonus. Which day to? 16th August. Bonus has come in one ratio. What ratio? 1:6. Meaning you will get one bonus shares. Don't interpret other way around. Sir, for one share you will get 6 bonus. Which company will give that? But tell me, I would like to buy that company ka shares. Very, very doubtful that. So whenever they give you the numbers like this, you always interpret one bonus shares for 6 shares held. If you have 6, you will get how much? Old bonus, I will say. If you have 1 original shares or old shares, you will get, or if you have 6 original shares, you will get 1 bonus shares. Sir, till 16th August, investor has how many shares? Till 16th August. On 1st April, we already had 25. On 20th June only, we have purchased 5,000 more. So totally, how much do we have? If you have 30,000 shares, how much bonus will you get? Make a working note for that first. Number of bonus shares, how much is that? 5,000. Show a working note better. So number of bonus shares is how much? 5,000. Sir, bonus shares ka meaning is what? Can you tell me that bonus ka meaning? Bonus shares means additional shares given to existing shareholders for free. Yes. That means as an investor, we have to give any money to buy the shares, or we will get it automatically for free. Automatically for free. So is there any cost associated for an investor for bonus shares? No. So for bonus shares, what do we do is, in the investment ledger, we will just write two bonus shares. We will just write two bonus shares. Cost column, we will write 0. Amount column, we will write 0. Because are we spending any money or no money? But number of shares column, we will write 5,000. Because we have received a bonus shares of 5,000. Any problem on this now? So totally how many shares we have here? 35,000. Including bonus, 35,000 shares in totality we have. Next comes right shares. Right shares came on what day? 15 days later, that is 31st August. Rights also came in one ratio. What is that ratio? 3:7. The right shares ka meaning is what? Right shares is also additional shares given to existing shareholders at free or at a discounted price, at a concession price. What is that concession price here? 15. First, let's find how many right shares are we eligible. How many are we eligible? If we have 7, we are eligible to buy 3. This is the ratio. If we have 7 original shares, we can buy how many right shares? 3. Do we have 7 original shares? How many do we have? 35,000 shares. Till the right shares cut date, if you count, we already have 35,000 shares. So how many right shares are we eligible to buy? When you cross multiply, you will get 15,000. Now 1 minute. Sir, if you remember, nothing much, I am explaining only still. Sir, if you remember in regular class, I used to say, right shares is like your Amazon coupon. It's like your Flipkart ka or Amazon ka coupon. If you have Flipkart ka voucher or Amazon ka voucher, what and all can you do? You can use that voucher and buy some goods. Can you sell it to someone if you want? Yeah. Or if you're crazy, you can tear it also. If you're crazy, I mean, I don't know. That depends on you. Yes. So there are multiple options. Yes. One, either you will use it and buy some goods, or you can also sell it to someone. Possible. Right shares are also like that only. Right shares are also like that only. Whenever you are eligible to buy right shares, as an investor, you have two options. Rather, you have three options. One, you can utilize this rights. You can utilize this rights and buy how many shares? 15,000 shares. Or you can sell this rights to somebody else. You can sell this rights to somebody else. Or you can say, I don't want it. I have reached nirvana. I don't want it. Meaning you can reject also. Your call. Nobody will reject. Either they will utilize and buy, or they will sell. Okay, na sir? Now let's see Mr. Sundaranga, what he did. Sir, right shares, if you want to buy, how much price you need to pay? 15. So let's see what Sundars did. The shareholders were entitled to transfer their rights in full or part. They can sell the full right or in part right. Sundar, what did Sundar do? 33%, Sundar sold 33.33% of his entitlement to Shaker for a consideration of 2. So Sundar has done both. What is that both? 33% means, can I say 1/3? 1/3, if you do in a calculator, you will get 0.333333. 33.33 ka percentage divided by 100 also, if you do, you will get 0.333333 only. Correct? No. Sir, Sundaranga sold how much? How much of rights Sundar sold? 1/3. 1/3 he sold. How much right shares he was eligible? 15,000. How much did the right he renounced or sold? 15,000 ka 33.33 percentage. If you don't want decimal, take 4. If you don't want fraction amount, take 4 decimals. 33.3333. 4 decimals you take, you will get perfect number. How much are you getting? 5,000 shares. Okay. 5,000 shares. So Sundaranga sold to whom? Shaker. Free, or he collected some money? He collected how much money? 2 rupees. How many rights were sold? Rights towards 5,000 shares was sold at a price of 2 rupees per rights. How much is that? That means for Sundar, this is an income. Where will income go to? P&L. That's what you write. Amount transferred to P&L is 10,000 rupees. Okay, G. So the entry for this, if you want to pass, you can write bank account debit to rights income, or you can directly write bank account debit to P&L. So is this entry affecting investment ka ledger or no effect? Is this entry is affecting investment ledger? No. So will this come in your anywhere in your investment ledger? No. Because the entry is bank account debit to P&L. You are preparing investment ledger, no? Investment is neither getting debited nor getting credited. So no effect. If at all they ask P&L, then you'll have to post this entry. Sometimes they also ask that. I don't know whether they've asked here, but anyway, just say. Sir, Sundrangga sold 33% means, what about the balance? Balance, obviously, he would have exercised. Balance, right? Sold or he utilized? Utilized. Calculate that. In 15,000, 33% is sold means balance is 66.67%, or you can calculate like here only, no. In 15,000 shares, 5,000 shares ka rights he has sold means balance will be what? 10,000. Okay. 10,000 shares he ignored or subscribed, meaning he purchased these shares. He purchased the shares. Right shares have to be purchased at a particular price. What is that? 15. How many shares? 10,000. At what price? 15. How much value? 1,50,000. Have a separate working note for all of them. It will carry marks. What is the journal entry? So right shares is also investment only, no? What is the journal entry for additional investment purchased? Investment to bank. How many shares? 10,000. How much value? 150. Check if it is posted. To bank 10,000 and 150. 30. This for the rights. This we call it as rights subscribed. Rights subscribed. Next, dividend. Careful about this. Dividends for the year ended 31st March 20x1. Stop there only. Go back to the first line. What did they say? On 1st April 20x1. That means our current year is starting on 1st April 20x1. What is our full current year? 1st April 20x1 to 31st March 20x2. 20x2. Keep that in mind. Come back and read this adjustment again. Dividend for the year ended 31st March 20x1. X1, X2 Allah, X1. So it is last year. So this is a dividend relating to last year. It was declared at what rate? 20%. Sir, last year ka dividend will be declared in the AGM, no? That means AGM will happen during the current year period, right? So last year ka dividend was declared in the current year. At what rate? 20%. When did the dividend get declared? 1st October. Yes, Saru. Sir, last year, how many shares we had? Now people, we don't have to. So we have 4 categories of shares. Can you tell me what are those 4? If at all you want to say. We have 4 types of shares if you want to call it. One, we had some opening balance. Then we made a new purchase. Then we got some bonus. Then we got some rights. On bonus and rights, should we have to worry about the dividend, or question is saying no dividend? On bonus and rights, we don't have to calculate the dividend. Question is clearly told. That means the dividend drama will only come on 2 shares. What are those? Opening or purchased. Yes, so opening is 25, purchased is 5. Okay, what are they saying? Alright, now check. Dividends, read this line once again. Dividends for the shares acquired by him on 20th June 20x1. On 20th June 20x1, how many shares did he buy? On 20th June 20x1, Sundarmurthy purchased the shares of 5,000. Yes, sir. Dividends for the shares acquired by him on 20th June are to be adjusted against cost of purchase. We have discussed this adjustment. Can someone? Perfect. Sir, this is something called pre-acquisition dividend. Do you remember we discussed this consolidation? What is the journal entry for pre-acquisition dividend? I told you pre-acquisition dividend ka adjustment is not from AS 21, it is relating to AS 30. Here it is just directly come as an adjustment. So what is the entry? The journal entry is bank account debit to investment account. Yes, sir. Fine. Now, this on 20th June, whatever shares you have purchased, ideally you should not get dividend on them. Agreed? On 20th June, whatever shares you have purchased, ideally you should not get dividend. Why? Because you have purchased the shares in the current year. But is this dividend for the current year or last year? Last year. Yes. So ideally you should not get it. But in reality, are you getting? Yes. Hence, is this normal dividend or pre-acquisition dividend? Pre-acquisition. And for that, we have to, will we treat this as a normal income or adjust it against cost of investment? Adjust it against cost of investment by passing the journal entry bank account debit to investment. How much? How many shares? 5,000. Dividend is always calculated on face value. Face value of each share is 10. What rate was the dividend declared? 20%. So the dividend amount is 10,000. Easy now. This is on what shares? Shares purchased in the current year. What sort of a dividend? Normal or pre-acquisition? That is what I have written here. In dividend, I have categorized into two things. One, we have a pre-acquisition dividend. On what shares? 5,000 shares. How much is the amount? 10,000. What is the journal entry? This. The provision is pre-acquisition dividend should be reduced from the cost of investment. Agreed? But will we receive the dividend only on this shares or even opening balance? Opening balance. Last year, how many opening balance we had? 25,000. This 25,000 shares, you had it last year. Huh? Yeah. And the dividend is also for last year. That means any dividend on this 25,000 shares is a pre-acquisition dividend or normal dividend? Normal dividend. Because last year you had these shares and the dividend also relates to last year. So this is a normal dividend. So in this problem, we have normal dividend also, pre-acquisition dividend also. Calculate. What is the dividend calculation? 25,000 is a number of shares. Each ka face value 10. Dividend declared at what rate? So the dividend will be how much? 50,000. This is a normal dividend. So what is the journal entry? Bank account debit 50,000 to dividend income 50,000. And this dividend income, where it will go? P&L. So the next entry will be dividend income account debit to P&L account. How much? 50,000. That's what I've written here. This 50,000 will get transferred to P&L account because this is the entry. Okay, sir. Now, will this particular adjustment affect investment ka ledger? This. No. What about this? What about this? Will it affect investment ledger? Yes. What will be the posting? What will be the posting? In investment ledger, you will post it as by bank. Have they done? Yeah. By bank, how much? 10,000. Why? Because this is normal dividend. This is what sort of a dividend? Pre-acquisition dividend. And as per AS 13, pre-acquisition dividend should be reduced from the cost of investment. That's what we've done. Okay, sir. Yes, Manas. If this line is not given. Okay, perfect. I think I've addressed this in the class. Maybe I've given a note also. No problem. So our question is, if this line was not given, what should we do? Sir, ICI always assumes, just an ICI assumption, whatever shares you have purchased in the current year, you will receive dividend on that also. Even on whatever shares you have purchased in the current year, on that also you will receive the shares. But the dividend relates to current year or last year. That means it will always be what dividend? Pre-acquisition dividend. So you will still treat it as a pre-acquisition dividend, even if this line is not there. That is what ICA has done on a couple of questions. So follow the same. Anything else? He's saying, sir, if in this problem they've told no dividend is payable on right shares and bonus shares. If that line was not there, would you have calculated the dividend on rights and bonus also? Yes, you would have. Yes, some problems we have done that in our regular class. I think in ICA only such material only such questions are there. Yes, this is sorted out. Can I proceed further? Now people, till you're done, next on 15th November, Sundaramurthy finally 25,000 equity shares he sold at a premium of 10. So premium is always calculated from face value. What is the face value? 10. How much premium? 5. So what is your selling price? 15 per share. 15 per share. Whenever there is a sale, you need to calculate net sale proceeds. You need to calculate profit or loss on sale of investment. First, we need to put up a working note for this. First, net sale proceeds. How many shares sold? At what price? 15. Calculate that. How much is it? So, sale proceeds is 3,75,000. There is no brokerage. If there was brokerage, minus. Here, this one and all will not be there. Come dividend adjustment and all, mostly doubtful that they will not give there. Okay. So, brokerage may come. If at all they say sale transaction attracts a brokerage of 5%. Sale transaction attracts a brokerage of 5%. What you will do? Will you take 375 or you will minus 5%? Minus 5%. Such questions are also available. So here it is not there. So I have taken the number as it is. Whenever you sell, you will make some profit or you will make some loss. How do you get profit or loss? Compare sale price with cost price. Here have they told how are we supposed to calculate the profit? Check the question. You are required to prepare investment ledger and you also have to prepare P&L, but you're supposed to do the valuation on what? Average cost. Not FIFO, but average cost. Even if it was not told, we would still prefer what method? Average cost. Average cost is the easiest. How? Very straightforward. Take your calculator. Sir, you have purchased the investment multiple times. First time when you bought, how much cost you incurred? 375. Add. Take your calculator, keep punching the number. This. Again, you purchased it by paying 80. So add. Bonus shares plus 0. So no cost. Right shares you spend 150. So add. Okay. Right. This is the cost for how many shares? This is cost for one share or this many shares? 45,000 shares. Yes, sir. That means what is the average cost? Understood? Everyone understood? You just have to find average cost. This is the cost for one share or this many shares? This many shares. How much is that? 45,000. For one share, how much is the cost? Like that you'll have to do. That's your average cost. Clear? But you should not do this. One adjustment many will forget. So that is where I did like this. Do not forget there is another one. What? That also you should minus. Because 10,000 is what? Pre-acquisition dividend. What is the concept of pre-acquisition dividend? Pre-acquisition dividend should be reduced from the cost of the investment. Many will forget this when they are calculating. 3 marks, 2 marks, go in the. Don't do that. Okay? Careful. So add all this and subtract this. Add what? Everyone understood that? Add all this and subtract 10,000. What are you getting? 5 lakh. I think that's what I've written here. Add all this and subtract 10,000. You will get 5 lakh 95,000. 5,95,000 is a cost for one share or how many shares? Adding all this, you will get 45,000 shares. So this is the cost for 45,000 shares. So for one share, how much is the cost? Some number you are getting. Did you sell one share or how many shares did you sell? 25,000. Or if you want it as formula, you can construct your own formula. What is the formula? Total cost divided by total number of shares. If you do this, you will get average cost of one share multiplied by the number of shares sold. Like that also you can mark it up as formula. Done now. So multiplied by how many shares did you sell? 25. How much is the cost? 3,30,000 555. Sale value 375. Cost is only 350. So 44,445 is the profit on sale. Now 2 entries you'll have to post. Sale proceeds and profit. Where it will come. What is the journal entry for investment sold? Bank account debit to investment. How much value? Sale proceeds of 375. Posted a number of shares column 25. Amount column 375. You made a profit. Profit means credit or debit. Profit means debit or credit. Debit. How much? 44,445. The debit side, one number, let's not fight over one rupee. Okay, all good. Then what's our balancing figure? Balancing figure arrived as a, you can calculate this also or you can get it as balancing figure. If you want to calculate, you can. How? Very simple. Add all this. How much you said? Adding all this, how much was this number? 5 lakh? 5,95,000. 5,95,000 is a cost for how many shares? 45. In 45 mein, how much have you sold? In 45 mein, how many shares have you sold? 25. How much is remaining? How much is remaining? 20. So multiply by 20. Multiply. How much are you getting? 26. Okay, 2 lakh. 2 lakh 60. 2 lakh 64. 444. This only you will get it as balancing. Either you can calculate or balancing figure. Yes, no. Sir, simple. If you want cost of investment sold, you will multiply it by the number of shares sold. If you want cost of remaining shares, then you will multiply by remaining shares. Calculate or balancing figure, your choice based on the availability of time. Okay, Nasaru. If you are preparing dividend column here, if you are preparing one more called dividend column, any balancing figure in the dividend, you transfer it to P&L. But here they have asked P&L also. If you just check, they have asked investment as well as P&L. Three things I think goes to P&L here. If I recollect, what are those? One is profit on sale. How much we got? Or maybe first let's call out the three component. Profit on sale. Then dividend or normal dividend. Normal dividend. One more. The rights, Sundar sold it to Shekhar. That rights income. What is the rights income? If you want, you can check. Rights income is 10,000. Dividend income is, normal dividend is 50,000. See, rights income 10,000, dividend income 15,000. Profit on sale is 44,555. These are the three things which will get transferred to P&L. When they ask you P&L account in this problem and all, don't prepare it in that normal format. What they are really asking is the extract, meaning only these P&L components which you found, how it gets reflected in P&L. So you can prepare P&L in your normal old format, trading P&L. Remember, all expense on the debit side, all incomes on the credit side. Post it and leave it at that. No need for full format, not necessary. Yes, sir. I think all the things that 1 minute, let me quickly review. Yeah, I think that's done. Okay, people, thank you.